All right. Going over macros today. I'm using a different computer and a totally different mic to record, so my audio might sound different. I'll probably look over this video and see for myself. If it's fine, I'll just upload it on YouTube. But it doesn't matter if you can hear me and if you can, hear the words and all the syllables I'm saying. I'm sure it's fine, right? We're going over macros today. Okay, macros. The verbal definition of a macro is a 20-minute interval that starts from the last 10 minutes of an hour and ends at the first 10 minutes of the next hour. So, but though that's within a kill zone, okay? The 20-minute interval of the starting from the last 10 minutes of an hour and ending at the first 10 minutes of the next hour within a kill zone, okay? Within a kill zone. It can be Asian, it can be London, it can be lunch, it can be PM session, it can be AM session, New York AM, just within the kill zone, okay? That's what a macro is. But if we, enable, let's see, if I get rid of these indicators and turn on the kill zones toolkit, you'll see that this is New York sessions. This is the entire New York session right here, and it's still progressing to it, still all the way until 4:30. All right, so the first macro that occurs in the New York session is 8:50 to right around here, 8:50 to 3:10. That's a macro. Why? Because if we go to 1 minute, wow, let's go to the 1 minute. See. If we go to the 1 minute, you can see that where we marked that right here, 8:50, okay? 8:50 to 9 is what? That's 10 minutes, okay? Because if we count every one of these candles, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay? And then this candle closes at 9 o'clock. So yeah, that's 10 minutes right there. Because at 8:50, that's 10 minutes, okay? Then we lead into the next hour at 9, and then it ends at 9:10. So it's 8:50 to 9:10. And if it was the next hour, it'll be 9:50 to 10:10. If it was the next hour, it'll be 10:50 to 11:10. If it was the next hour, it'll be 11:50 to 12:10. Okay, very, very, very simple. But what a macro is and what it does and what it can be used for is a macro is a time and price where it seeks liquidity, okay? It seeks imbalances. It seeks to rebalance imbalances or to, rebalance into some sort of equilibrium or rebalance some sort of imbalances that are around, price. Or it seeks liquidity, like I said. And if you notice, right, look, pay attention to this. As soon as the 850 hits, what does it do? Bang! Takes out that low. And then during the same time, comes right back up. Bang! Takes out those relative equal highs, okay? So a macro, right, is basically a 20-minute interval in price. And I already just gave you what that is, 850 to 910 or 950 to 1010 or 1050 to 1110. You get it, okay? You should have it by now. But during this, price gets very energetic. Okay, it gets very energetic. Sometimes we won't do that all the time. Okay, sometimes we'll do it. It'll probably get energetic on like the way lower time frames, like 30-second, 15-second, and 1 minute. But scouts looking at like the 3 minute, 5 minute, it's not that energetic. Based off what happened before then. If price was moving extremely fast before the macro will probably do something. It'll probably follow up that volatility, or it'll probably use that time to calm down. But if there's some sort of time distortion before the macro, what that time distortion is waiting for, it's waiting for a macro. Because if you notice, time distortion is right here. See that? See how we're in a kill zone and price is not moving how it's supposed to? It's just consolidating. What is it waiting for? That macro. You see it? That's what it's waiting for. And if you notice, what happened? What started happening as soon as we came into that? Volatility kicked in. Bang! Lows taken. Bang! Market structure shift. Bang! Fair value gap. There's your entry. Bang! Take it right back up to equal highs. Easy. That's your trade right there. And I'm not saying you can't trade a macro. Of course you can trade a macro. If there's volatility within a macro, what makes you think you can't trade it? Go ahead and drop down to that 30-second or that 1 minute and go ahead, look and analyze it and pay attention, when the macro kicks in. Anyways, another example of macro would be from where? 950, right along here. 950, right there, all the way to 1010. Bam, there's your macro. Do you see that? Yep. I see it. It's right there. There's your macro. Let me get rid of this. There's your macro right there, boy. Sometimes every macro won't provide a setup. It's not gonna provide a setup right then and there. What a macro would do sometimes is it'll, like I said, it'll either offer a setup within that time. It'll get real volatile and offer a setup. Okay, but I can't go on the 10-second and 30-second because I don't have the little essential thing. You can see how it says explore our plans. I have, but it doesn't matter. No, we're just looking. We're not taking trades. We're not doing anything. Well, but what a macro can do is it'll either set up for a trade that you may see after the macro, or your trade setup will form right there within the macro. But the chances of that happening is kind of 50-50. Okay, you really don't know. It's 50-50. But what does price do? Uh-oh, as soon as the macro kicks in, what does it do? Bang! Takes out these lows here. What does it do? Come back up. Bang! Takes out that high there. Wow, amazing. What does it do? Come back down into these lows. Bang! Okay? So what a macro does is it does two things. It's either going to rebalance to an equilibrium or retrace to an equilibrium of a dealing range. It's either going to seek liquidity, and it's either going to refill or rebalance imbalances. And what does it do? It seeks liquidity, and then it comes back, seeks liquidity again, and then it comes back again and rebalances these imbalances here. Okay? And like I said, you see that time distortion right there? Whenever you see time distortion, what is it going to be waiting for? Is it waiting for a certain key time and price? Is it waiting for the 9:30 opening? Is it waiting for a news driver? Is it waiting for a macro? Well, in this case, it's waiting for a macro. And if you look, as soon as that macro kicked in, that volatility kicked in. Right on that candle, right there. 950 said, bang, smashed right into those lows. And then as soon as the macro ended, we were like, okay, we're done now. Isn't that amazing? Pretty cool. Anyways, going back into macros, 1050. Oh my God, 1050 to what? 1110, right there. Bang, it even goes higher too. Oh my God. All the way up there. This is your macro right there. Okay. And if we look at previous price action, if we know that a macro is coming up, right? Oh, I forgot to mention that too. A macro, like I said, is either going to form a setup, continue a setup, or it's either going to form a setup, continue a setup, or it's going to, I forgot what I said earlier. Something I said, it was the second thing. But in this case, it continued a setup because what did it do? See that accumulated liquidity down here? Bang. Came back up, market structure shift, or you can say market structure shift there on the 5-minute. Came back down into this fair value gap right there, and then there's your entry. Bang. Okay. If you jump to the 5-minute, there's an entry right there. I call it. I don't know how much you want to bet, but there is a entry right along there. You see that? See that right there? See that? There's your order block. Comes above it, dips down. There's your entry. Simple, right? But back on the 1-minute, okay? Back on the 1. Let's not keep off track. But I'm trying to remember as I'm talking. I'm trying to remember the 3 things. But it'll either form a setup, continue a setup, or well, I can't even remember it. I really cannot remember it. But I'll try to remember it, and I'll say it to you again so you can know what I'm trying to say. But here again, 1150 to what? 1210. There's your macro right there. Oh, let me drag that over. Right there. Bang. If you look, as soon as that time kicks in, what does it do? Bang. Bang. Right there. See that? Fair value gap. Whenever you have a fair value gap, I mentioned this once before. When you have a fair value gap or an imbalance right above some sort of liquidity point, you want to see price draw into that fair value gap also or rebalance that fair value gap. Does it do it? Yep. It seeks liquidity. And then what? Rebalance that fair value gap. And then macro stopped. It was like, okay, we're done. Yeah, we're done here. And then it had to change its state of delivery there with that fair value gap and this order block here. And then that would have been your entry. Okay. For this example, it formed a setup for you. It formed one. Okay. Because if you look, that's the change of state of delivery, and that's your fair value gap, and that's your entry right there. So it formed a setup. In the other example here, it continued a setup. It continued it. It didn't form it. Like it didn't actually form it here. The macro is over here. There's a little up move here. So it continued the setup. There's a formation of a setup, and then a continuation of a setup. Okay? Very, very, very simple. Let's go over one more macro. I'm not gonna make this video too long, but I want to drill it in your head, so you will know what the world a macro is. Because if ICT asks you what a macro is and you don't know what it is, you're gonna get slapped. Okay, do you understand that, boy? Ah. Anyways, here's a macro right here. Oh, wait, hold on, I'm tripping. Bang, all the way to 110. So that's your macro right there. Drag it up. It's the macro. Oh my god. If you notice, price is also distorting within a macro. So that even supercharges the macro even more. So there's going to be a future move coming. What was that move? It was right here. It was distorting time, where it had some sort of time distortion going into this fair value gap. Because what was there? Oh my god, an order block. Oh my god, a fair value gap. What does that mean? Oh my god, it changes state of delivery. Holy crap. And then look at that, a breaker too. There's a breaker right there. See that? That's your breaker. So there's a change of state of delivery with a market structure shift and a breaker and a previous liquidity purge. Okay. And then this one here, it just continued the setup. Okay. It didn't actually form it, but it continued the setup because it came into it during the macro and then it said, okay, we're done here. And then you could have targeted right there at those equal highs or at the rest of this imbalance that's sitting right here. And did it come and refill the balance? It did. And did it go higher? Yup, it did. Sure did. Anyways, I complete. Did I just turn? I just deleted my indicator. Wait a second. Hold on. I can't end the video off by deleting it. There we go. Okay, that's way better. Anyways, I'll be in this video here. This video doesn't require a lot because it's simply macros, 20-minute interval in time within a kill zone that gets very volatile and seeks liquidity and seeks imbalances. Very simple. And I'm sure hearing this, you're probably like, okay, wait, how can we use this? How can we amplify it? You'll be able to figure it out. We'll figure it out. Just by me showing you this, I don't want to make this too long. You will be able to figure out how to use macros, okay? Anyways, like I said, this video doesn't need to be too long, so let me stop yapping and end this video right here. Peace.